This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, December 22nd, 2014. Euro dollar. So the market remains under pressure, breaking down to fresh 2014 lows, with the focus now set on the 2012 base at 120.40. Ultimately, the downtrend remains firmly intact, with only a break and close back above the 50-day moving average to compromise the bearish outlook. Sterling dollar. Cable continues to consolidate just off recent 2014 lows, with the market remaining under pressure and locked in a bearish consolidation, with downside seen below 155.40 and towards a measured move objective at 152.50 in the sessions ahead. Ultimately, only back above 158.25 would compromise the bearish outlook. Dollar yen. Dollar yen has once again broken back above the 10-day moving average to suggest that a higher low is now in place at 15.50 in favor of a bullish resumption back towards and eventually above the recent 7-year high at 121.85. Euro Swiss. Euro Swiss has recently broken out of a multi-week range, with the market taking out 20.45 last week to suggest that a base is in place. However, the market will need to close above 20.45 to confirm this outlook, while inability to do so will keep the pressure on the downside, with the focus still on a potential retest of that major barrier at 120. Aussie dollar. Aussie dollar is consolidating recent declines and remains under pressure, with a focus on the next test of key psychological barriers at 80. However, with daily studies oversold, the market is currently in the process of unwinding these studies and could see a bit of corrective gains. However, ultimately, any rallies should continue to be very well capped in favor of continued downside. Dollar CAD. Dollar CAD is in the process of consolidating recent gains, with the market having traded to fresh 5-year highs, taking out the previous 1467 yearly high, and now with a focus on the next measured move objective at 117.50 further up. Any setbacks in dollar CAD are expected to be very well supported by previous resistance turn support at 1467, with ultimately only a break and close back below 113 to compromise the bullish outlook. Kiwi dollar. Kiwi dollar has been locked within a consolidation over the past several weeks, with the market, though, trading within a bearish consolidation following recent declines over the past few months to the downside. This puts the pressure on a move back towards the recent low, with a break below the 76.09 2014 low to open the door for a measured move downside objective into the 72.85 area. Ultimately, only back above 80.35 would compromise the bearish outlook. S&P 500. The SPX 500 has rallied to another record high, with the market taking out the previous 2080 high and pushing to 2082 thus far. The break above 2080 now opens the door for a move towards the next key psychological resistance at 2100, while ultimately a break back below 2010 would now be required to take the pressure off the top side. Gold. Gold is in the process of a mild recovery after basing out by multi-year lows at 1131, with the market now looking to put in the next higher low ahead of the next major upside extension towards the key resistance, which comes in at 1256. Ultimately, while the market trades below 1256, the medium downside pressure remains intact, and a break back above 1256 would be required to officially shift the structure. Inability to do so will keep the focus on a retest of that 1131 2014 low. That's all for today.